you higher than you've ever been. You've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Let's go into the charts. We go. Bada bing, bada boom. With Bitcoin to the upside. Yesterday after the live, we had that double bottom idea out for you on a platter. Hopefully somebody out there took it. It was a nice little bounce off the FUD of the Binance thing. This is why I don't really pay attention to news, because they served up the people who shorted the news hook, line, and sinker to the upside. Same thing happened here with the Silicon Valley Bank news. The FUD piece that came out just took people to the upside for 9 days. So are we going to see some sort of bounce here that continues? That is the question. Let's go into the heat map for High Block. What is the heat map? Well, it's when people lock their liquidity in the charts to be burnt to a crisp by the market maker for not using a stop loss. And we get to see where those crispy characters lie. So let's see where they lie on the 1 minute time frame. So last night we put out for you that juicy double bottom idea. We said where there was not really much more on the internal liquidity range on the long side, but there was a hefty amount of 15 billion in short liquidity waiting above, and we talked about those stack zones we'll go over to in a minute. But basically they took out a huge $16 billion chunk of shorts.
Fatality.
And they fatigued off that on this little guy up here at 27,405. And Are they still on the table? Let's see. Are they still a percolating character here? It looks like they still have that guy up alive and well but not maybe well underwater up here at 27,405. So, but they got their partners in crime, and all that stacked liquidity above got gobbled up. And then they started to retrace into the longs that opened up with a fervor. Let's see who they gobbled up on this. They had a $218 million character down here that they bounced off of happily.
Fatality.
Yes, and that's why you pay yourself if you're 50 or 100x, because they don't like to leave big bubbles like that on the table, and they came back to them without hesitation. And now they're starting to bounce off that. Do they go lower? There is still a lot of hefty characters down below here at 25.89. You're still imbalanced by 7 billion in long liquidity now here on the entries that were provided by these guys as they scooped it up on that side. If you look though, if we start to expand our vision to the higher time frame, that's when we start to see where other pools may lie. We put out to the Discord group that the 7-day time frame does have an imbalance to the upside here, up starting at 27.5, that we still could come up all the way to the 28.2 region now on that path to the upside. The shorts were enticed and they bought it, and they are underwater, so they could continue this path to gobble them up on the 7-day time frame. If we go to the monthly time frame, let's see where that liquidity lies. Shout out to everyone here. By the way, please consider hitting that like button if you have not yet hit it, because this High Block Capital is a nice little resource to share with you for free, but it costs us a pretty penny. So let's see what it looks like on the monthly time frame. The monthly time frame does have that imbalance still to the downside with double digits at 24.5 and below, which also coincides with the 3 and 6 month time frame if you just go off the yellow here. However, if you go and compare the yellow amounts with the sheer amount of liquidity above, there is more liquidity above in total than is below on this range that they allow us to see between 20k and 34k. So I would postulate that a stab to that 28k region could be in order as a continuation play for Wednesday. Knowing how the cycle of the week goes, well, we had false move Monday to the downside, Tuesday rise up, and is Wednesday a continuation of that move with midweek reversal on Thursday, and midweek reversal could be a consolidation with a run for profit on Friday, even higher or lower. Generally, Tuesday complements Wednesday. Last week we had a strange week with the bank holiday, so it was an odd order to say the least. Let's go here to the 3-month time frame. We did have this 100 billion, 120 billion taken off the table here, and we were postulating whether they would come into that 25,260 billion or not. We went with the idea of the double bottom. It looked too juicy to pass up, and with the 6 time frames oversold, we were saying I don't like to short that 22, and the 22 hour took you to the upside. So are we going to come back down to this though? We did clear some path in shorts, but with where we are in price action immediately right here, there is still a good amount of liquidity up here at 28.2 and beyond. If you are going to leave this and be satisfied with the divergence you took here, I was thinking the other day about Binance, right? And so Binance got served and said you have to give up all your assets of your US clientele. What if they just bought Bitcoin with their clientele's money and said, what assets? And they used that to, you can't confiscate. I mean, I guess the FBI has confiscated Bitcoin before, but it would be a perfect time to get it on the lows and to change their BNB, for example, since they're being sued BNB as a security, so they could change out all their BNB into Bitcoin and nobody could do anything because Bitcoin's not an organization. So it's just a thought, maybe Binance is the one buying up Bitcoin right now as a hedge against the lawsuit, who knows. So on the 3-month time frame and the 6-month, it is, you still have large thick bands down below, down to the 22K region. We're not out of the water just yet. At some point you do spawn some divergence, and maybe these are the positions of the market maker. We did postulate that before as well. So if we find this, it looks like they closed out the 25.2 region with this wick, so they did tap into that 89 billion somehow on the 6-month time frame, so they got them to get their 80% message or something and then close out the trade anyway on that wick. Maybe that's how they spawn the divergence there. Let's see if the divergence is on our oscillators later. But if you look on the 6-month, you still have that juicy character down at 22.5 and 24.3, 100 billion down there as well. So we're not out of the woods just yet. If we go to the yearly time frame, that's when it all fades to a nice aquamarine, and it doesn't seem like it's so bad to the downside, and you could see these pools to the upside in the 100 billion region all the way up to 34K, which suggesting that there could be another run up here if we get this bullish engulfing of that bearish candle. That is a mighty juicy idea to continue higher, as it did here on the Silicon Valley thing. FUD plays generally hesitate people, which the hesitancy causes them to take the bull by the horns, pardon the pun, and maybe take it to the upside. So we'll just go back to the monthly time frame and then head into the charts real quick. The higher time frames don't change that often, so we may be going a little bit fast, but you can play it back if you like. So we'll go into the Binance chart and throw on our oscillators. All right. Boom, heads up display on. Momentum Master is the suite we use. Link in the description for more. MomentumMaster.info. Scroll down the features. Toggle the components you want to see. Look at it in its glory, or look at each component and read about it at your leisure. So right now we are looking at the idea here. Let's go and zoom out to where we were yesterday. The angle has not been changed. You can go back and check this out. It's pretty funny. So we were talking about this possibly being a double bottom, and the the London handoff was quite nice to the upside here. They paused first at that pool we talked about, and then they went up to the second pool and then just continued to rip it all night long into the early mornings of the daily candle close, and they closed it all the way up at the range high at that 236 level of the bearish trend base fib level. If we go back to the 12-hour time frame, we can see what that level is, or sorry, 786 level of this bearish trend base fib level. So we went all the way back up to that, which also coincides on the 12-hour with this adaptive moving average. Why is it adaptive? Well, it likes to screen out filters out the noise and keeps it steady with the trend, and so you get to see where that trend is. These dynamic support and resistance tools, which if you don't know how to do the Fibonacci, will also happen to coincide quite nicely with those levels. And yeah, one thing we also saw of note that we posted out to the group was that we did bounce off this nice weighted moving average on the daily time frame here after wicking down into this 1382 region. So are we going to pierce through this cloud and reclaim up into these regions on the bullish trend base fib level that may be occurring here? That is the question, to see if Wednesday will continue this or not. We did negate the cross down event here. That was something interesting to note. This was previously giving you a cross down, negating this cross up, but they bullishly engulfed that entire thing and said no thank you, and we are back in the game on the baselines. If this can hold the baselines, we could see more upside on the daily time frame. If we look at the daily time frame, it has come down while going up, which is quite interesting. So they went down to come up, and the stochastic has reset slightly, and the money flow coming back in. One thing we did note on the 3-day time frame was that the 3-day the money flow is beneath the RSI, which suggests you could get this burst up on the 3-day, and we are bouncing off the weighted and the cloud on the 3-day time frame, suggesting what happens in the fractal-like nature of this indicator suite. You come to the cloud and you bounce off it if there is bullishness and thickness to the cloud, which there is. So this is why we could have seen that move to the upside. It gets a little bit more complicated than that, which is why we went into the liquidity first to make things less complicated here. On the 22-hour time frame, you're getting that move to the upside here on oscillator B. The stochastic RSI moving up nicely. You still have potential momentum of 20 points to spare before you get overbought and could even pin for more by the next daily candle close. You are not exactly reset on the Williams, but you still have room to move up here and cross itself on its average on the 22-hour time frame. If we look at the cloud health here on the 22, whoa, we are currently beneath the cloud. We would have to reclaim this thickening cloud on the purple to come back above the 27K essentially level and close out above like we did with this candle and see it higher for it to be valid. If we go to the 12-hour, that I believe that cloud also coincides quite nicely with the 22, so we would need to see this reclamation. This also happens to be the 236 of the bullish trend base fib level. Let's show you how we put the bullish trend base fib on there, shall we? All right. Sorry, let me turn this off on Momentum Master Ultimate. Okay. So first, what you want to do is go over to your fib retracement tools over here on your bar. Favorite the fib retracement and the trend-based fib extension level. The trend-based fib extension level, you use 3 clicks, 1, 2, 3, and one is the impulse and the other is the retrace. In this bearish scenario, we went down and then we retraced up, and the retrace was more shallow than the impulse down, so that implies you'll have a C wave to the downside and projects the math out there according to the depth of the retrace and the depth of the impulse. You see what I mean? So you do impulse to retrace and that's it. And the math for the fib retracement tool, you can go back and pause and copy this down if you like. This is what I use because I find it to be the most accurate levels for me, namely the 236 for your entry, which was here, and boom, you take it to the downside into the golden pocket region, which is in green here, which we did get into. And you have a little bit of resistance potential on the 65, 706, 786 region, which we consolidated around for, a good 3 to 4 days before deciding to move down into the golden pocket. So the same thing occurs on the opposite side of the spectrum, and we'll show you how to do that right now. So let's go into that idea on the hourly time frame. So you do the reverse is true. You do an impulse to the upside and the retrace to the downside. So if this is your impulse to the upside here and your retrace is there and that's all she wrote for that, then your projection is in these regions here with upwards of 29,199, 29,200 for these pools up above, which coincides, I think, quite nicely with levels over in this region, which are some pools that we looked at before dropping down out of here, and also some vector recovery range levels here. So if we can maintain that 236 of the 226,831 region and start to build a narrative out of this zone, we could use this as a rise, retrace, continuation idea, your ABC to the upside. There are many ways to skin a cat, and there are many names for the same word, like the Eskimos have 40 words for snow. So you can call this a rise, retrace, continuation. You could call it a cup and handle, a baby dragon, whatever you want to call it. So ABC to the upside if you see 236 hold. I just like putting this math to it because it gives you a little bit more of a structure to maintain and put your stops into profit if it does go your way. All right, so the cloud is thick on the hourly, which is why we saw this bounce off the cloud, which is what happens on this fractal-like thing. We just showed you how that happens on the 3-day. It's happening again on the hourly. This is just what it does. It's not something I designed to occur that way. It's something I back tested and found that's what happens, and I'm just relaying that information to you of these components in the suite. You can read about them and at your leisure and try before you buy kind of thing, and just see how this is the local bottom for Bitcoin that we traced over price action with the indicator, and it just does the same thing over and over again. And you come out and you retrace and you're gone. And so this kind of cloud coming to the thing to kiss and then your continue is something to look for in the charts. So the cloud came up to this, and are we going to kiss it and be gone? It happens before and it will happen again. Does it happen today? I have no idea. This is your shoulder, head, and your shoulder out of here. You just got to play confluence upon confluence, and if it plays out, it plays out. If it doesn't, you lick your wounds, you move on. And so the 15-minute is getting overbought here. The hourly and the 4 hours still have some room to play. Let's start to go down the time frames from the 12-hour. We did skip a few time frames here as we make our descent through the time frames. The 12-hour is getting overbought, however, still has some momentum on this last leg, potentially speaking. If we go into the Williams, also could continue higher in its suppression of the 4-hour. This is why you don't short when the 4-hour is high every time, because 6-hour and 4-hour and 6 and 12 could also pin that 4-hour. 6-hour starting to show a little bit of signs of fatigue here, could potentially go a little bit lower or reset to the 50 level, who knows. The money flow is beneath the RSI, suggesting you could come up here and do this kind of dealio where you surge up for that double top extended M scenario on the 6-hour time frame. If you look at the cloud here, it is kind of thick. If we can maintain it above it, that's an interesting thing to note. If we just negate the entire fatigue at the cloud, we did see a bullish buyback of that 6-hour wick here, suggesting you want to potentially pierce through it. Sometimes you do pierce through the cloud and kiss it later, so you could come back and kiss that 6-hour at a different time when it curves. I do like the angle I'm seeing here. It's a very surefire looking angle here that doesn't look like indecisive. This kind of angle is kind of shifting, but it's also getting thinner at the same point in time, suggesting that this preemptive move could take you up here on the 6-hour time frame. If we go to the 4-hour here, 4 hours already doing it, as you can see here, starting to thin, and we did get our kiss off the cloud after piercing above it. So the 4-hour has done its thing and could send that as a pierce above the 6. So you're getting this kind of shifting and thinning motion of the 4-hour. Looks healthy to me on the cloud. You are getting overbought on the 4-hour as well, but could double top as you do in this fashion here. See the last leg, you went above the cloud and boom, you went up for a good 6.5% from that point. So that little bit of juice at the end could really give you a solid move if you trust it enough. And you have to look to the lower time frames for that trust, and let's go there now. Well, before we do that, we jumped the gun, and let's go to the 4 hours Williams and whatnot. The Williams came down to the domain of the the MACD came down to the Williams domain, said what's up, woke him up, and now they are traversing together. And when it gets to that 0 level, it could pierce through into the domain of the stochastic RSI. We have some ways to go for that, so we could still go up higher for that to occur. The money flow and the RSI are in a healthy state to get riding in tandem with one another, not one ahead of the other one just yet. Hourly time frame, you got the money flow beneath the RSI, which is good for upside momentum. The money flow could come up to the RSI, pushing it up here. You are getting the Williams to come down ever so slightly in a healthy manner here as you're rising up. You could start to see another surge on the Williams. The cloud health on the hourly time frame has shifted to blue. So are we going to continue that? The angle is starting to wane here. We need to see some sort of surge up to change this angle, or it is going to start to do something like this. and then we could fatigue off it and break down here. So you'd need to see the angle of this hourly cloud change. Once again, the time frames to look at are about an hour from now when the handoff from London to New York is complete. It has nothing to do with streamers' time frames. It has to do with these little bits of happiness of the charts. How do you get these on your charts? Well, this is the ICT kill zones by Tradinator. It will tell you when all of these things occur. And so like when London closed here, you had that surge up. So the London close baton pass to New York was when you started to see this move as we inputted after our live here. So we told you the idea before everyone, and then it starts to go. So we're reclaiming the cloud on the 15. This is a healthy sign. We bounced off the cloud. Can we reclaim the 236 NCR path to the upside? The 15 minute is your guide with the 5 minute and below for that overbought status. Are we going to get, we should have a chill out here. We have bullish divergence on the money flow here on the 15 minute. We got the double bottom rising sun event to play out here on the 15 minute as well. If you took that bounce, congratulations to you. Always lock in your gains though. It could come lower at any given moment. The angle of which the cloud is shifting could suggest you get a cross up. You already have the cross up event. You need to maintain the baselines to continue higher. And you could even do fractals within fractals. If you want to get funky with it, you could have a trend-based fib inside of a trend-based fib, and you could look at what you need to do here to continue higher as well. So there's a free indicator that can put these on your charts automatically if you like. It's a DGT indicator. Pitch Fan also has trend-based fibs inside there. So the 15 minute. So the 15 minute looking to possibly chill out here and create a shoulder of some kind, shoulder, head and shoulder out of here. And you also have the larger head and shoulder, shoulder, head and shoulder out of here too. So you have this move that could project you upwards in this region if we continue higher. They got the shorts on the run. They got everyone believing Binance is under threat. They could have induced people to just keep shorting, and it looks like right now you have more shorts entering the table than longs from this previous bottom here. These shorts are underwater, and the only point where there were more longs than shorts was back here. You had a higher pool of longs here than shorts, and they came back and scared off some of these 100x longs. So they are paving more pools up here if we zoom in to the upside here than the downside. Let's just be fair and put them both in the frame. So you do have a little bit more of these juicy characters, these 100x stacked with 50x, stacked with 50x, stacked with 100x up here in the 27119 region than you do down here exactly. So it could continue higher to get these characters at above at 27,411 and higher. I'm bullish until it's no longer bullish, but you do have the 7 billion imbalance here from these guys who entered. Is that the perfect narrative to take it down into the 25.2 that we never got completely? Anything's possible. Always protect yourself at all times and always have a plan for either direction. So this 236 is what we want to see maintained. It's also a bounce at the one level of this bearish trend-based fib. So you got these two levels of potential SR flippage that could occur. And if we do, we could see ourselves up in these resistance regions. And if the institutional levels give the pass at 27,777, then you could basically break on through to the other side at 28,357. This is my story, and I'm sticking to it, not wavering a second more, and trying to not waste a second more of your time as well. So that's all for today, and I thank you so much. Let's go see what you have, any questions or comments, and then we'll bid you adieu. What's up, Wendy? What's up, Rehab? What's up, Spragitos? I wonder how you pronounce it. Spragitos. Very cool. Well, that's my story, and I'm sticking to it, folks. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time, bringing the fire, the accuracy, the precision, and all that fun stuff. Oh, and if you're looking to get funded to trade NASDAQ futures and all that stuff, we got a great team of people in the Momentum Master Discord, including yours truly, that can help you out with that. Links are also in the description. Check it out, and we'll catch you on the flip side. Peace.